Welcome back to Stocks and Trades channel. We provide easy to digest information in short videos about stock market investing, personal finance, money saving, and building wealth. Our content is designed to help you achieve financial freedom sooner. Today's video will provide news, insight, and investment suggestions on the week ahead. We'll analyze 2+1 stocks to watch this week and some others that will be volatile. So, let's begin. Disclaimer. All trading involves risk. Only risk capital you are prepared to lose. Past performance is not an indication of future results. This content is for educational or entertainment purposes only and is not investment advice. Markets ended lower this week, as tensions between Russia and the Ukraine continued to take center stage, driving market volatility and a flight to safe haven assets. These geopolitical tensions come on top of a market already grappling with elevated inflation and rising Fed rate hike expectations. Over time, we would expect market focus to shift from geopolitics to economic fundamentals once again. Nonetheless, in this backdrop, we believe investors should position portfolios for both offense and defense to help navigate elevated market volatility in the year ahead. For the second week in a row, the major U.S. stock indexes appeared to be on the verge of an overall gain at midweek, only to end up negative after declining on Thursday and Friday. An 8-week rally that pushed U.S. crude oil prices from around $70 per barrel to as high as $95 faded, as the price retreated to around $92 on Friday. The potential for additional oil exports from Iran helped to offset concerns related to supply disruptions stemming from the continuing Russia-Ukraine conflict. Amid inflation concerns and rising geopolitical conflict, the price of gold climbed to its highest level in about 8 months. The price of gold futures briefly eclipsed $1,900 on Friday, marking a 6% increase from a recent low in late January. U.S. small-cap stocks have lagged their large-cap peers year-to-date, but they've outperformed large caps for the past 2 weeks. A small-cap benchmark, the Russell 2000 Index, has risen about 0.3% over the past 2 weeks, while its large-cap counterpart has fallen nearly 4%. Our first stock type is dividend-earning stocks. These are a great way to earn passive income. This week's suggestion is Vici Properties, with ticker symbol VICI. Vici Properties is an experiential real estate investment trust that owns one of the largest portfolios of market-leading gaming, hospitality and entertainment destinations, including the world-renowned Caesars Palace. It operates through the following segments: real property business and golf course business. The real property business segment consists of leased real property. The golf course business segment consists of 4 golf courses. Vici Properties' national, geographically diverse portfolio consists of 27 gaming facilities comprising over 48 million square feet and features approximately 19,200 hotel rooms and more than 200 restaurants, bars and nightclubs. Its properties are leased to industry-leading gaming and hospitality operators, including Caesars Entertainment Incorporated, Century Casinos Incorporated, Hard Rock International, Jack Entertainment and Penn National Gaming Incorporated. Vici Properties also owns 4 championship golf courses and 34 acres of undeveloped land adjacent to the Las Vegas Strip. Vici Properties' strategy is to create the nation's highest quality and most productive experiential real estate portfolio. The company was founded in 2017 and is headquartered in New York. Edward Baltazar Petoniak has been serving as Chief Executive Officer of Vici Properties. Some technical analysis data shows that Vici Properties' return on equity is 10%, its average volume is about 6.11 million, its market cap is $17.56 billion, its beta is 1.14, its PE ratio is 15.17, and its EPS is $1.84. Despite our rating as 7, we consider this stock as a strong buy. Based on experienced analysts offering 12-month price targets for Vici Properties in the last 3 months, the average price target is $33.60, with a high estimate of $35 and a low estimate of $31. With current price at $27.92, this would mean about 20.34% average profit over the next year. Vici Properties pays an annual dividend of $1.38, which amounts to a dividend yield of 4.94% and a dividend growth of 9.09%. The ex-dividend date forecast is the 23rd of March, So buying a Visai Properties stock by then will pay you 36 cents on 7th April. Despite owning properties in the highly cyclical casino industry, Visai managed to support its dividend right through the coronavirus pandemic. Visai actually used the pandemic uncertainty that's still lingering to expand its portfolio, recently agreeing to buy one of its peers. Following that deal's consummation, Visai will own 43 properties across 15 states. It will have relationships with some of the biggest names in the casino business, with a fairly balanced mix of regional casinos and Las Vegas locations. Moreover, its average lease length will be a huge 43.5 years, with regular rent increases built in across its portfolio. Even if the casino business doesn't grow as much as investors hope, Visai will collect a steady stream of rent on its properties. And with a high dividend yield, this is a great place to look for stability and some growth upside. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our second stock type is growth stocks. A growth stock is a share in a business that's shown above average earnings and has the potential to grow faster than the overall economy. This week's suggestion is Advanced Micro Devices, with ticker symbol AMD. Advanced Micro Devices Incorporated is an American multinational semiconductor company that develops computer processors and related technologies for business and consumer markets. While it initially manufactured its own processors, the company later outsourced its manufacturing, a practice known as going fabless, after Global Foundries was spun off in 2009. AMD's main products include microprocessors, motherboard chipsets, embedded processors and graphics processors for servers, workstations, personal computers and embedded system applications. The company operates in two segments, computing and graphics, and enterprise, embedded and semi-custom. Its products include x86 microprocessors as an accelerated processing unit, chipsets, discrete and integrated graphics processing units, data center and professional GPUs and development services, and server and embedded processors, and semi-custom system-on-chip products, development services, and technology for game consoles. The company was founded in 1969 and is headquartered in Santa Clara, California. Lisa Su is the president and chief executive officer of AMD since October 2014. Some technical analysis data shows that AMD's return on equity is 44.9%, its average volume is about 77.4 million, its market cap is $185.24 billion, its beta is 1.95, its PE ratio is 44.29, its PEG ratio is 1.42, its EPS is $2.57, and its asset growth is 38.57%. Our rating is 10 and we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for AMD in the last 3 months, the average price target is $154.28, with a high estimate of $200 and a low estimate of $125. With current price at $113.83, this would mean about 35.54% average profit over the next year. AMD has been hit hard by the current seller's market. However, with extreme demand for the type of products that they produce, AMD is positioned well for the long term. AMD is an attractive name suited for long-term investors. Over the next several years, the analyst expects the company to keep on delivering impressive share gains, based on a strong roadmap and the technology lead the company now has over Intel. Investors should not forget that AMD's chips are being used in several fast-growing end markets that should help the company sustain its outstanding growth in the long run. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our third stock type is blue chip stocks. These are typically large, well-established and financially sound companies that have operated for many years and that have dependable earnings, often paying dividends to investors. This week's suggestion is Broadcom, with ticker symbol OVGO. Broadcom Incorporated is an American designer, developer, manufacturer and global supplier of a wide range of semiconductor and infrastructure software products. Broadcom's product offerings serve the data center, networking, software, broadband, wireless, and storage and industrial markets. The company operates in two segments, semiconductor solutions and infrastructure software. It provides set-top box system on chips, cable, digital subscriber line, and passive optical networking central office/consumer premise equipment OCS, wireless local area network access points (OCS), Ethernet switching and routing merchant silicon products, embedded processors and controllers, serializer or deserializer application-specific integrated circuits, optical and copper, and physical layers, and fiber optic transmitter and receiver components. Its products are used in various applications, including enterprise and data center networking, home connectivity, set-top boxes, broadband access, telecommunication equipment, smartphones and base stations, data center servers and storage systems, factory automation, power generation and alternative energy systems, and electronic displays. The company was founded in 1961 and is headquartered in San Jose, California. Tan Hocking has been serving as Broadcom's president and chief executive officer since March 2006. Some technical analysis data shows that Broadcom's return on equity is 26.5%, its average volume is about 2.69 million, its market cap is $239.46 billion, its beta is 1.03, its PE ratio is 38.67, its PEG ratio is 1.1, its EPS is $15, and its return on capital is 20.3%. Our rating is 10 and we consider this stock as a strong buy. Based on experienced analysts offering 12-month price targets for Broadcom in the last 3 months, the average price target is $686, with a high estimate of $750 and a low estimate of $615. With current price at $579.99, this implies 18.28% upside potential over the next year. Broadcom's dividend track record isn't as extensive as those of other dividend stocks, but it's raised its dividend for 12 consecutive years. However, management has bumped the payout quite a bit in recent years, raising it an average of 50% per year over the past 5 years. The dividend payout ratio is just 46% of cash flow, so not only is the payout affordable for Broadcom, but the company could continue growing it moving forward. The company has solid operating momentum, revenues grown 10% annually over the past 3 years. With 5G and the Internet of Things as future growth drivers, Broadcom seems poised to continue paying increasingly large amounts of cash to investors. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Next week will not be that popular among dividend stocks, but we have some interesting options to suggest. On Monday 21 February, U.S. financial markets observe Washington's birthday and no company has assigned this as its ex-dividend day. Tuesday 22 February is the ex-dividend date for Snap-on Incorporated, Sunoco Products Company, Lowe's Corporation, and Manulife Financial Corporation. Wednesday 23 February is the ex-dividend date for the Scotts Miracle-Gro Company, Littelfuse and Thomson Reuters Corporation. Thursday 24 February is the ex-dividend date for the Whirlpool Corporation, Huntington Ingalls Industries, Honeywell International, Diageo, and Moody's. Finally, Friday 25 February will be the most popular day of the week and is the ex-dividend date for Northrop Grumman Corporation, M&T Bank, the Estée Lauder Companies, and Union Pacific. Be sure to buy any of the above stocks before the market closing of the ex-dividend's date previous day to benefit from the dividend payment. If you find this video useful, please like it, leave your comment below, share to a friend and subscribe to our channel. See you next time.